3 years, and until worldwide adoption, maybe 5 to 10.
Even in the world of high-speed travel, there's still some way to go before you'll be able to reach your destination on board a Hyperloop. Okay, so we just saw a video. Dirk, you are the CEO, co-founder and CEO of Hyperloop Transportation Technologies. Thanks for sitting down here today at Davos.
Thank you for having us.
So we saw in the video this, move that you have made to reveal your first full-scale passenger pod. I'd like to talk about Hyperloop as this visionary technology. What's your goal for the company short-term and longer-term as well?
So the capsule actually just arrived in Toulouse, right? So it's literally just fresh there. We now are going to start the assembly process, integration into the larger system, optimizing it before then moving it to the first commercial track. So we have now 2 commercial agreements, one in the Emirates, in Abu Dhabi, the other one in China. And there's going to a lot to be happening this year. It's a very busy year.
So will it move from that Toulouse track to Abu Dhabi in the next year, do you expect?
It will be optimized there, and then, we are in the design process right now in the Emirates, and there are obviously always some regulatory things that you can't really foresee, but we are we're very hopeful that this year we actually already are starting construction in the Emirates as well.
And what does that look like? Give us a sense of what that would look like for those of us who haven't seen a Hyperloop. I mean, there aren't any currently operational in the world. It's pretty new technology we're talking about here.
Well, it's actually going to be very similar to what you already know. I mean, at least the feeling. So you don't feel speed, right? You only feel acceleration and deceleration. And you don't want to build something that's only something for early adopters. You want to build something that works for everybody, for a 2-year-old as much as for an 80-year-old. So the experience is going to be fairly normal, let's put it this way. But we're trying to do some completely new things when it comes to passenger experience. So just making travel a little bit more, pleasant, let's say it this way, and solving one of the biggest problems, which is that trains, metros today are actually not making any money. So we can put those things together and monetize on the time the passenger spends inside the Hyperloop, and allow us to maybe even offer transportation for free in the future.
So a Hyperloop can make money, is what you're saying.
Exactly. So the big difference between a Hyperloop and a high-speed train is that all the feasibility studies that we have done with governments around the world show a return of investment within 8 to 12 years. And that's something that hasn't been seen so far. So even if we are 100% wrong, we're still amazingly compared to what's out there today.
I've read that it costs between $20 to $40 million per kilometer of this track. So walk us through how it's possible that you could be profitable with that type of a cost incurred.
So the cost actually depends a little bit where you build. So you have to, of course, analyze the route. But more or less, those are the numbers that we've seen so far. It's not so much about the construction cost. It's really more about the operational expenses. So it's just cheaper to operate a Hyperloop. You're inside a low-pressure environment, right? So maintenance is reduced. It's automated. It has a very low energy consumption. We're producing, ideally, our own energy, and depending on the route, we might be even produce more energy than we're consuming. So all of these things are coming together and just allow us to have very low operation expenses.
How do we know that's possible, given that there are none of these in existence? And what type of sort of modeling and evidence are you pointing to that this could really work?
I mean, the technology is not really the issue. We know how to make a train levitate. We know how to move a train. We have moved trains at 600 kilometers an hour right now. And the big problem in a high-speed train is actually to overcome the air resistance. When you are trying to go faster, the energy consumption is exponential. So it's getting very expensive. In addition to that, at that speed, air becomes almost like fluids. So you have a lot of vibrations. We solve that. So our system is much more compact. You're inside a low-pressure environment. There's not a lot of resistance there. So you can, just similar to an airplane that goes into high altitudes, move really fast with very little energy. And all of the technology has been already developed. If you think about the capsule, that's exactly built like an airplane, But an airplane needs to go into a low-pressure environment and keep you safe. So our partners at Artificial in Spain have experience. They've been working with Boeing and Airbus and doing exactly that. So we're relying on all of these partners to, and their knowledge to build what we need to get done. And that works fairly well.
So that capsule that we saw in Spain, will they continue building another one like that, or is it sort of a wait and see how this one that we saw goes?
No, we actually already have more ordered. So there's more coming.
How many more coming?
Well, we hope we have several more in the future, but right now we have another 2.
Another 2 in the works. Mm-hmm. And would those also go to Toulouse then for testing, or could those go anywhere?
Well, so you need to do the integration and the optimization. And in Toulouse, we will have the first complete full-scale prototype, if you want so. So that's our R&D center. So we're able to put the capsule inside the system, prep everything before it then moves over into the commercial systems.
So when would we be able to actually ride in this capsule?
You and me?
Yes.
Well, we'll see. Probably earlier than you would think.
Earlier than we would think.
But the commercial lines we expect to have done approximately in 3 years.
Approximately 3 years from 2019 today.
Yeah, well, so we are planning in the Emirates. We still have a target date of 2020 for the first part. And but again, that's the first commercial line. You and me, if you sign a waiver, we can probably ride a little bit earlier.
A little bit earlier. That's a year from now.
Yeah.
What is the process when you say sign a waiver? Talk about some of the requirements that would be needed to be in place before we can actually get in a Hyperloop.
So the big hurdle, right, is a regulatory framework. A Hyperloop is something completely new. It doesn't exist today. So it's not an airplane and it's not a train. So there are no laws that regulate it. And of course, you need to make sure that the safety standards in place, that everything is tested and you have your safety records. So it just takes a little bit to get that done. And of course, you have to work with governments around the world to create these safety standards. We have been working with TÜV Süd already and have presented the regulatory framework, if you want, so the proposal. We're now working with the different countries that already have agreements with us and are trying to get their feedback in order to implement that. We've been working with Munich Re, the largest reinsurance company in the world, and they actually said that they're able to insure our technology, which is a very important step when you're moving into commercialization. But that's really what's necessary now in order to have worldwide adoption and in order to be able to use the systems, you need the regulation in place.
So I believe you have 8 countries or governments you've been working with. Is that the current number as of now?
It's sometimes hard to keep track, but I mean, we have 2 commercial agreements right now, so the 2 commercial lines, and then I think we're roughly 8 in total where we have ongoing projects, feasibility studies that we're working on. In the US, we're between Cleveland and Chicago, for example, so that's moving. There's going to be some updates very soon as well. There's some things happening in Europe. I mean, it's exciting.
Can you give us any preview of those updates over in the US?
No. You will have to wait until we do the official announcements.
Do you see a lot of interest in this project from governments and from different, whether it's cities or states, countries? What type of people are coming to you and saying, we're interested in a Hyperloop?
So in general, we have a very unique model that's based on collaboration. So when you do something like that and you want to innovate, the best thing is actually to be open and say, if you have an idea and you want to contribute your technology, your knowledge to build something that's better than what we have today, just come and join us. So we have a lot of companies that are reaching out, and I think we have over 52 partners by now. A lot of innovation projects around the world with amazing companies, small ones and big ones. So it doesn't necessarily need to be the big conglomerate, but sometimes it's also the small startups that has a great idea. Governments, of course, we're solving a big problem, and that is that a big part of their budget goes towards transportation, right? Everything is subsidized. New York, just to give you an example, spends $2.2 billion roughly for their metro system, which is one of the most used ones. And I mean, countries like China, they're almost in the trillions because high-speed trains then are even more ineffective. They're calculating it in a different way because, of course, they're seeing the benefit of having the infrastructure and people moving. But the way that we are going after it is really looking at it as a business. So, and it can be profitable. And of course, if you're building something that is profitable, it can be privately financed. You don't necessarily need the government. They still might want to be involved, but it gets a little bit easier, and you can have more infrastructure that is profitable and maybe even has a much better passenger experience.
In this model, would you ever consider becoming public or kind of changing from that collaborative crowdsourcing model into more of a traditional publicly listed company?
Well, I think you can do both, right? So we actually wanted to be being public, if you want, so very early on, because I think that it's important that the community that is part of what we're doing can also benefit on the financial side. But you know, as you know, it's not so easy, and the markets are very unstable. And right now, we work with our team to make sure that the people that are part of it are having the opportunity to invest, and of course, they're investing their time as well. But that doesn't mean, even if you go public, it doesn't mean that you cannot work in an innovative way, right? So I think it's just a new way that we have been starting to work this way, and yeah.
But not ruling out maybe someday for Hyperloop transportation technology.
I think that our biggest benefit is a different way we're working, and that's also reflected in the value that the company is creating, and that's really what's important when you're listed.
Do you ever speak with Elon Musk, who, of course, was the original kind of visionary of this Hyperloop transportation model?
Well, actually, the idea is much older. So we have hundreds of years where we have been dreaming about traveling inside a tube, right? We all grew up with the image of traveling inside a tube. You have it in comics, you have it in Walt Disney. So there were several projects in the 60s. In the 90s, here in Switzerland, there was a big project called Swiss Metro, which was actually very similar to what we're doing today. It was just very big, like huge maglev trains in underground tunnels in a low-pressure environment. So it was difficult from a cost perspective, and it was also tied just to one country. So what Elon Musk did was he kind of pulled those out and said, hey, rather than building this high-speed train that we are trying to build here that's very expensive and ineffective, why don't we build something better? And then he said that he was too busy with Tesla and SpaceX. He wanted someone else to pick it up, and we reached out, asked for permission, and started working on it. But we always made sure to make understand that he's not involved in anything that we're doing. I think it's more about this collaborative model. It's not about me, right? It's about all the people that we have in the team and all these amazing companies that are coming together and really saying, hey, we have the unique opportunity to build a transportation system the way you should do in 2019. Let's do it.
Your main competition is Virgin Hyperloop One, which has done some tests successfully in the US and has also talked about moving into cargo transportation. How do you see the competition?
I think competition is great. You don't want to be the only one. So we realized very early on that in order to make this successful, we needed to build more than just a company. We had to build a movement. So we were the first company out there, and Virgin Hyperloop One, I think they started almost 2 years after us. And the first thing I did actually was reach out and meet them and see if there's ways to collaborate. I think at the end you want to work kind of together. They're probably, the companies working on it are the people that are the closest to us because they have the same passion, they have the same dream. And the world is big enough really for more than one company.
So you don't feel that the race is on to have the first passenger? How intense is that for you?
I don't. Maybe sometimes, internally you want to, I think it's in the human nature to be competitive. But no, I think that we need to celebrate their successes as much as ours because it moves it forward, right? So, when they had all these scandals going on, that was not a great thing for us as well. So it's it's important that you have other players. You know, when I was alone, when we were the only company out there, people were telling me this is not possible. And today, you know, we have, I think, 5, 6 different companies. There's governments now really putting research into it, and larger corporations. So we don't hear that anymore, and it's an important part.
What's your big picture view for how big Hyperloop transportation technologies could ultimately become, Dirk?
Well, we are a technology provider. So we build technology to make transportation better. And we then license this technology to operators, to governments around the world. So we're very scalable. And we don't need to, you know, build a system and operate it, but we're just doing an agreement. We're licensing the technologies. They take care of it. We already are working with a lot of different companies that learn how they can implement the technology. So I think that we could be very fast, fairly big.
So countries all over the world is the goal?
I mean, that's what we already are doing. I think it's really more about going broader. So it's not just about a capsule that moves inside a tube.
It's very important that's P for profit, but I also believe that P for the purpose, P for people, but also P for the planet. I do not believe you can run a business in the 21st century when not having sustainability integrated in your agenda. If I look, I'm also a scientist, and if I look at the climate panel reports discussing the difference between 1.5 degree and 2 degree, I really do believe businesses have to stand up and take responsibility for that also.
Are you concerned that in this environment of growing political risks, additional challenges to the business outlook, that perhaps things like climate change might take a back seat? Does that worry you?
I'm actually seeing here both in Davos and also at the UN General Assembly, and see more and more CEOs as just coming from a committee of chairmen where we're discussing these issues here. And I see actually more and more chairmen, also CEO, actually stepping up and say we have to take responsibility for this, because this is really the long term, how to secure our business in the long term.
And when you talk about the cost implications here, because sometimes leaders say, okay, we have to balance both, as you mentioned, profit and doing what's right for our customers, for the environment. I mean, overall, what is your outlook for the cost environment going forward this year when you look at an expected rise in input costs?
But I really do believe investing in sustainability is also a long-term investment in your business here. And Carlsberg, as you may know, have a foundation which is one of the main shareholders, and we always are focusing on the long term of Carlsberg here. We have introduced different programs here. We have the Towards Zero is no carbon emission, no water waste at our breweries. And also, as you may have seen recently here, we're trying to cut down on the amount of plastic. Previously, we had the 6-pack, 6 cans of Carlsberg wrapped in a lot of plastic. That is now eliminated. We're gluing them together, and thereby we eliminate 1,200 tons of plastic and 60 million plastic bags here. This is, of course, an investment in the short term, but it's really good business for the long term.
It does seem as though there's been a sea change, if you will, in awareness about plastics and just how harmful they are to the environment, to the oceans. Do you think more needs to be done, though, with the private and public sector working together?
Absolutely. I'm also the Deputy Chairman of the Danish Innovation Fund, and actually last Thursday we announced a report together with McKinsey actually discussing how to reuse and recycle and upcycle plastic in our society. I'm very worried about the plastic in our ocean on land and breaking down to microplastic, ending up in fish and so forth. And of course the forecast is saying if you're not doing anything, then in 2050 there will be as many tons of plastic as fish in our oceans, and that's not acceptable for our children and grandchildren.
I know you've done business in China in your time, in your position, and there are some concerns we often hear from Western governments and corporations that
it only makes me smile, 'cause I know where we belong. Do you hear my song? Flying like the snow out there. We can still find ourselves in the summer of our life.
every time we meet, there is this holy feeling inside. Your energy's incredible, your heartbeat sounds so wonderful, and your new soul seems to shine so bright. Now I run to lovely places, I will stand still when you're near. We could always leave a trace, full of love, without a fear. I'm breathing in, I'm breathing out. The world was made for us to find a new dimension now. Whoa, I'm breathing in, I'm breathing out. The world was made for us to make it beautiful somehow. To make it beautiful. It's beautiful, 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 beautiful. Every time I see you, there's so much light in your eyes. And every time we meet, there is this holy feeling inside. Your energy's incredible, your heartbeat sounds so wonderful, and your new soul seems to shine so bright. Now I will run to lovely places, I will stand still when you're near. We could always leave a trace, full of love, without a fear. I'm breathing in, I'm breathing out. The world was made for us.
Welcome everyone, please take a seat. We're about to begin our next discussion.
I'm breathing in, I'm breathing out. The world was made for us to make it beautiful somehow. Whoa, I'm breathing in, I'm breathing out. The world was made for us to find a new dimension now. Whoa, I'm breathing in, I'm breathing out. The world was made for us to make it beautiful somehow. To make it beautiful.
You think every business will want to make a profit, but some of today's most hyped companies are often unprofitable. Think Uber or Tesla. Sexy names to investors, but their bottom line is less attractive. Many of these loss-making companies are often alluring to consumers as well. That's because it means dirt cheap rides on OFO, less expensive holidays on Airbnb, and a whole universe of music for the price of 2 coffees on Spotify. There's a saying that goes, revenue is vanity, profit is sanity. So, have investors gone insane? Last year, 3 out of every 4 companies going public in the US reported a loss before debuting on a stock exchange. The last time we saw a percentage that high was during the dot-com boom in 2000. But if you look at the data over the past 4 decades, the average percentage is much lower, with less than 40% of companies being unprofitable when they go public. In 1980, just 1 in 4 IPOs was not profitable. It's clear that the economy has moved on since the 80s, and if you need proof, just take a look at Amazon. The e-commerce giant is the world's second most valuable company by market cap, but it's also known for being light on profits. The company was founded in 1995, went public in 1997, and was unprofitable until the 4th quarter of 2001, losing $2.8 billion in the process. Its path to substantial profit has been slow, only really hitting the gas in 2017. Its profit jumped dramatically from the 3rd to 4th quarter last year, surpassing the $1 billion mark for the first time. It even hit a record high of $2.5 billion in the 2nd quarter of this year. But when you compare America's largest companies over the last 20 years, Amazon's bottom line is minuscule, even when compared to younger tech giants. Still, Amazon has made its founder Jeff Bezos the richest man in modern history. His net worth is estimated to be more than $150 billion. So why are shareholders backing companies that lose money? A lot of it comes down to the growth of the tech sector. Tech is the fastest growing industry globally, and that phenomenon means investors are more comfortable with companies that tend to be unprofitable, at least early on. Let's get back to those companies that went public last year. Just 17% of the tech companies were profitable for their IPO. Compare that to 43% of non-tech companies. These startups are being kept afloat by venture capitalists looking for rising stars. They're putting their money on fast-growing companies like office leasing firm WeWork in hopes of the next big return. WeWork made losses of almost $1 billion last year as it spent on rapid expansion. But it's still valued at almost $20 billion. In London, WeWork has become the biggest occupier of office space, second only to the UK government. It's nearly double that of Google and much, much more than Amazon and Deutsche Bank. That growth story helped it sell about $700 million worth of bonds, although the top ratings agencies classified them as junk. These bonds are considered riskier than their investment-grade counterparts, but they can pay off if it all goes well. Choosing between growth and profitability has always been the multi-million-dollar question for companies. But venture capitalists lean towards growth. That's likely because the economy is progressively moving towards a winner-takes-all model, where a few big companies dominate market share and profits. In 2015, just 30 businesses made up half of all public earnings in the US. Apple, Google, Amazon, and Microsoft alone made up 10%. But there are some signs that the market is recognizing rapid growth without profit may not always be healthy. Chinese bike-sharing company Ofo grew aggressively, with nearly $1 billion in funding from Chinese tech titan Alibaba. It went from having no bikes on the road in 2016 to operating in more than 20 countries, boasting roughly 10 million bikes. The company is beginning to pull back from expansion, and it's scaling back or closing down in countries like the US, Australia, and India. It's looking for, you guessed it, profitability. One venture capital firm, Indie VC, is also disrupting the industry's focus on growth, instead preferring to invest in companies which are firmly in the black. The rise of unprofitable companies just wanting to grow market share can mean great deals for consumers. But it could also mean greater corporate consolidation, as smaller companies can't outspend large corporations and venture capitalists with cash to burn.
Great. Hello, everyone. Thanks for joining today. And I just want to set the scene. This panel is all about venture capital. It's about the future tech trends that are coming to bear in 2019. Just to set the scene, we saw record levels of venture capital funding in 2018. Over $250 billion were invested in companies. We saw the rise in the increasing presence of these mega deals or billion-dollar-plus funding rounds. And, of course, the continued influence of major players like SoftBank and the Chinese tech internet giants like Alibaba, Tencent. But we also saw new funding methods in the form of initial coin offerings and, of course, the changing landscape of venture capital. So what does 2019 hold, and where are investors putting their cash? I've got a fantastic panel today. Firstly, I want to introduce Phil Chen, the Managing Director of Presence Capital and Decentralized Chief Officer at HTC. Then we've got Rebecca Huang, the co-founder and Managing Director of Rivet Ventures, and Stefan Gross-Selbeck, the Global Managing Partner at BCG Digital Ventures. So I just want to kick off with you, Phil. What drove the record levels of funding last year? Was it more investors in the market? Was it just cash looking for a home, given some of the volatility we saw in other markets? Or was it just major giants driving the deal flow?
I think it's a combination of giants, VCs, and even family offices. There's more and more of these opportunities. I think one of the surprising things is the company that raised the most money last year, 2018, was Juul. I was really surprised with that stat. I forgot how much they raised, but that was a surprising. There's just more and more of these corporate ventures chasing opportunities outside even of their core business. And yeah, I think that's the main drivers of.
Rebecca, give us your assessment on what happened in 2018 and why we saw some of those trends we did see.
Yeah, we definitely have new players coming into the VC space. Families that didn't usually take the risk of investing in venture. Now they're getting interested. And I think part of it is related to the theme of this WEF, which is the technological changes and the rate of innovation that they observe in the space. They're worried, and so they want to be part of the game, and they're putting more capital into it. But also, they're having some good cases of exits, and valuations have gone up to rate numbers that have no precedent in history, and I think that has also created a new resurgence of interest in the space. We have a lot of new micro VCs and small VC funds that will allow pretty much anyone with a really good idea and team to find money as long as they do the work and talk to as many people as possible.
Stefan, what's your assessment of 2018?
So we're mostly involved in corporate venture capital, working with corporations, helping them incubate and then invest in new businesses. And that's a space which has been growing quite fast. About a third of the overall venture capital investments actually came from corporates in 2018. And that's a market which has been growing 30% year on year over the last 5 years. That's a growing space, and it's really driven by the need of large corporations of finding new ways to drive innovation, to drive growth in their core business, and they're seeing corporate venture capital as one way to do that.
Rebecca, you mentioned valuations there. We saw some pretty hefty funding rounds. We saw some absolutely massive valuations in the private space. Are there bubbles forming in some areas right now as you look at it?
That's the billion-dollar question these days. I do definitely think that there is an inflation in the market today. I would expect some correction to happen in the near future. But with tech, you never really quite know exactly how it's going to pan out. But from my perspective, I actually have moved away from Silicon Valley prices because some of the early stage valuations that we see are unreasonable, in our opinion. So I'm looking elsewhere, markets that are not maybe the hottest markets, traditionally speaking.
Phil, I talked about the changing landscape of VC at the start. Players like SoftBank with a fund the size of $100 billion. You've got Tencent and Alibaba out of China really investing huge amounts of sums in companies. Does that make your job as a VC more challenging? Does it price you out of a lot of deals?
For us particularly, no. I think it's for funds that are, say, in the $150 million to $500 million range, those that would compete with the Tencents or SoftBank for deals. I think the stage we're in, we're very much, a seed and Series A. We're lower than 100 million, and often we work with the Andreessens, the Sequoias, and because we're earlier stage and we're sort of also vertically focused. I think that's another trend too. You see a lot of vertically focused funds. Like this is the biotech fund, this is the fintech fund, and these fund managers, they figure out everybody in that ecosystem and vertically invest in that. I think what we did since 2015, we focused on VR, AR, and AI. And then we were able to find companies early on and then send them to the Tencents of this world and Andreessens, the big boys of this world. And so in that case, it was synergistic. Yeah.
Stefan, you made the point about the rise of corporate VC. And I mentioned some of the big companies that are playing now in the investment space. Do you find that a challenge when you look at some of the big companies that are investing? Does that make it more competitive, the kind of deals you're looking at?
Well, we typically work with these corporates, so for us it's not competitive. What we see is corporates increasingly looking at the startup ecosystem as a source of innovation. So we see very interesting constructs where corporates set up funds and obviously invest in startups, but also find other ways of cooperating in order to drive innovation in their core business. And that's what we see more and more of, and I think that's a trend which will continue.
So I started the conversation by asking where are investors putting their cash? So that's what I want to find out. Rebecca, you invest in companies that are serving women-led markets, consumer-focused firms. You say they provide attractive returns, and you made the comment earlier that you're moving away from Silicon Valley prices. Tell us the thinking behind your fund's thesis and how you look to invest.
So the thesis of our fund is based on the size of the market led by women. 80% of consumption worldwide is led by women, and we have an expectation that trillions of dollars will be spent by women worldwide, which makes this market larger than India and China combined. But in spite of that, if you look at Silicon Valley and the demographics that conform the investment community, we still have a predominantly male investment community. So that creates some opportunities and some gaps, which we're taking advantage of.
So you can pick perhaps companies that are with lower valuations and perhaps less competitive investment environments.
Yeah, so for example, we have seen in the last few years an uptake in companies that are in the fertility space. For example, that 5-10 years ago, they had no attention from the investment community in Silicon Valley. But one of our companies just raised $100 million last year. And so we see a change and a shift in the culture of investing, thanks to new players like us and many others who are focusing on this market.
And we'll dig a bit more into that, but I just want to come to you, Phil, first and get your take on what are the hot trends in 2019. Your fund is focused on virtual reality and augmented reality. So what opportunities do you see there?
I would say this as a general, especially what I see in, say, Chinese investors or family offices. I think if you go to China, you can see sort of almost every business model being experimented on. And I think what Chinese investors especially are looking for is what is that next paradigm shift? And it's not just incremental innovation; it's a fundamental. And what that means is deep tech. And so I do think the trends for 2019-20 is deep tech. And so often you see these the Tencents of this world, family offices. They're going deeper into universities. They're finding this professor doing research on CRISPR or DNA or some quantum computing, and starting to invest in deeper tech. And what that means is also your money, your patience has to be longer. And often family offices are better for that. They're often single LPs, so they have longer money, longer patience, and an opportunity where it's not just an incremental innovation where some incumbent already has established their grounds. And so if they're to look for that next frontier, it has to involve deeper science and deeper tech.
Okay. And Stefan, for you, BCG Digital Ventures invested in a number of various different industries. Blockchain is a huge part of that as well. So 2019, what are the big investment areas that you're looking at?
So I think in my conversations with corporates, it's still AI, which is a huge topic. Many of these companies sit on tons of data and actually only scratching the surface of making use of them and putting them to work. So that's a huge topic. In terms of industries, we're doing a lot of work in healthcare recently, but also energy. So these are really interesting segments where especially new ways of looking at data provides a ton of opportunity.
It seems like everyone's an AI company these days. Everyone wants to put AI in their company description, in their company name. So how do you manage to find the winners, or how are you looking to pick the winners? What are the trends or the traits you're seeing in AI companies that you think are going to pay dividends?
So, I mean, everybody is saying they're doing AI, everybody's doing something in AI, but then the big challenge for many companies we work with is how do you actually do it at scale? So how do you move away from a specific sort of cute little projects which drive value to really doing AI across a large organization? And that's what a lot of companies are struggling with, and that's what we see a lot these days.
So is that infrastructure you're looking
That's technology and talent, frankly, right? So how do you find the talent which helps you drive those initiatives forward?
Rebecca, I want to pick up a comment you made that this female market is going to be bigger than India and China in terms of the audience potential here. We have diversity is of course still a huge issue, as you mentioned, not just in venture capital, but even across the big technology firms that exist: Apple, Google, Facebook. Why is it still such a big problem?
It's a very complex and historical topic, but I think there are several aspects. One aspect has to do with what happens after we go to college and get educated. A lot of women are graduating with STEM degrees, but the feedback that we women get from the ecosystem a lot of times is that we should be doing something else. Example, when I was CEO of my tech company, I would go to events, I would introduce myself as a CEO, and people would respond saying, "Did you say sales or marketing?" And so there's this cognitive dissonance between seeing a woman in positions of C-suite, leadership positions, and what the market expects from you. The other aspect has to do with these boy clubs. There are many of these spaces and sectors that have been ruled by men for many, many years, and it's really hard to break that system. But I think, today, especially since the last couple of years, we're starting to see a lot of movement towards equality and a lot of men who are contributing to opening opportunities for women, which is very positive, and I'm very optimistic about the future.
Phil, just given some of those movements towards equality that Rebecca mentioned there, have you seen the companies that you're speaking to putting a much more emphasis on diversity?
Yes and no. I think when they're aware of that, often when they add a female into the team, it really brings a different perspective. And we've historically funded many female founders as well. And so, yeah, I don't think, or especially Silicon Valley, it's a culture of immigrants. And so when we fund them, it's naturally diverse, although it does still skew male. But the diversity it's a given. People know that of the top companies today, most of them are started by immigrants.
And Stefan, when you look at companies to invest in as well, how much do you think about the diversity of the teams you're investing in, as a way to think about actually how this company develops?
So diversity is a big topic for us. I mean, we're a rather large firm with 900 people globally, and diversity is a big topic. With about half of our team is female, but then if you look at it sort of by the different teams we have and by the different levels we have, there's not sort of gender parity across all levels. So and there's a lot as a company which we can do. It's small steps in terms of how do you recruit, how do you manage careers, how do you performance evaluations, a ton of small things you can do to drive forward, but it's a process which takes time.
Rebecca, what steps do you think need to be taken across the tech industry to fix some of the diversity issues that still remain?
A lot of people will advocate for quotas. My opinion personally is that it's more important to make sure that we source candidates in an equal way, so that you start with a pool of candidates that has 50% female and 50% male, and then let the best candidate win the position. I think there is a lot of work to be done by the men in the organizations to help amplify the voices of women in their companies. And women are self-organizing as well. We are getting together, sharing best practices, also sharing our networks